I am Erin West, and I am a trader these days, mostly futures, and I am also a trading teacher for women. And I've been using TradeWave for about a year now, and I was able to go fairly deep into some of the features it has and really try them out in various ways. And I have found it an absolutely indispensable tool for my trading. Not only has it directed me to a few trades that were really lovely, five-figure trades, but what it has really done is it's added an extra layer of confidence for the method that I already use. And so that's been the biggest shift that I found, is that it's given me that extra nudge to take a leap and to have that conviction that the trade will go my way. So in that way, it's actually just eased the way in my trading. And honestly, increase my profitability as well. So that aside, I also just really enjoy it. I love looking around and playing with different charts and playing with different time frames and different inputs and seeing what comes out. So if you're the sort of person who's just fascinated.
Hey guys, that video got cut off in the middle. That was a really cool testimonial I just received on TradeWave, so I thought to play it first. Let me just show you a couple of slides. Well, with TradeWave, you can predict the market's next move before it happens. And why can you do this? Because you can use history in order to find out what happened in the past, and many times it guides you to what's going to happen next, and that's what I'm going to show you today. So did you know there are some stocks that have risen 20 out of the last 20 years during the same exact time? Here's one I just found, and I just put it up here, which is Progressive Corporation between January 21st and June 2nd. It has gone up an average of 11.42% with no losing years. How about in futures and commodities? I found one which is the lean hogs. This is the UK version of it. That's just fascinating. It has gone up the same exact time, April 12th until April 24th, 42 out of the last 43 years, and it's gone up 11.52%. This is just staggering for 13 days, and nobody knows about these things. So what's the pain of most traders? Including myself, I was in that shoes, and I still have a lot of friends who are in that shoes, that they over-reliance on lagging indicators. These indicators on technical analysis that you're looking at, they're lagging. I didn't even understand what that meant when I first started using them. But when they give you a signal, they give you a signal about the past, not about what's going to happen now. So in many cases, after the signal is given, the move's already done. I didn't know this, and I lost quite a bit of money not understanding that. Another thing that used to really flip me out was the conflicting signals. That you get signals from two different indicators. One of them says buy, one of them says sells, and you get signals from these financial analysts that one of them says this stock is great, it's going to go up, and the other one says no, it's going to go down, hold or sell. Who do you believe? They both went to the same school, studied the same subjects. And news trading, usually when the news comes out, it's already priced in. And it is just, it was painful. I did this for many, many years. And in a book I'm writing, it's going to be out soon. You can actually read the story. It's pretty cool. But my God, how many times did I do emotional trading and guesswork? It was, and I've also gotten lucky. One time I made $400,000 in less than 2 weeks. And I thought I was just an expert, not knowing that I just got really lucky, like if I just bought a winning lottery ticket. You saw this. Erin West is one of the first people that used TradeWave, and she is a trading coach for women, very niche. And she's one of the people that really got the point about TradeWave really well, and she uses it all the time. And she has a weekly call with her students, and many of her students also use TradeWave, and they basically go through TradeWave about and check for the following week's trades in there. Now, I call seasonality the missing piece. Everybody's heard about seasonality, but nobody could figure out, okay, seasonality is great, but how do you use it? Why, and how do you actually create trading opportunities with this? And this was not available to anybody except the big companies. And there are also some very elementary tools out there that help a little bit, but nothing like TradeWave. Who am I? I'm a data scientist. My background is in AI and data science and in programming. And you can read my book. My story is in there. I have about 55 patents in my name, and there are many things that I have developed until I got into the world of trading. I decided to do this TradeWave, which is a story of its own. But in the past, technical analysis was never successful to me. And my God, I was so fearful, because when I got a signal, I just never understood, okay, what does this even mean that I'm getting this signal? It didn't really click for me. I also became a ninja trader expert. I was programming it really well for automated day trading. I tried day trading for a while too, and that was more stressful than anything I've ever tried. I also became an Elliott wave expert. And God, that theory, although I understand it really well, the biggest expert out there, Robert Prechter, has been bearish for 30 years. He's told everybody for 30 years that market's going to go down. And yes, market's going to eventually go down, but it's better to go down when you say it. And it just doesn't. He's been right in year 2000, 2008, and 2022. Well, and he's been bearish every year. So broken clocks are definitely correct twice a day too, and he's not even beating a broken clock. And I learned seasonality, or at least the concept of it, from this guy named Jake Bernstein. I bought a book, and the book was actually a table of seasonal patterns, which worked for a little while, then it didn't. But now, let's go to and take a look at TradeWave. This is something I worked for a few years. Actually, I built in 2018. I built the first proof of concept to see if this actually works, and it did. And I wish I had this when I first started trading. But then I got into actually building it because no such thing existed. So what is TradeWave? What can you do with it? What you see on the left side, I actually usually show it like this. What you see on the left side is the actual marvel of data science. This is what about 1 trillion data points have been cranked in order to find the most repeatable pattern in the number of years you're selecting. So right now it's 10 years. It's found every repeatable pattern you can imagine. It existed in here, and it ranks it with what's called a Sharpe ratio. Some people know what Sharpe ratio is, but the explanation is also on TradeWave.ai. It's a way for us to rank the quality and consistency of a trade. Right now, the top for Dow 30, and by the way, right here, you can select which group of stocks or securities you actually want to find the patterns in. So right now I'm on Dow 30, and you can see the patterns that are at least 8 of 10 years repeatable. Let me turn this thing back on. Amgen's on the top. So you're looking at the last 10 years, and this is actually a 9 out of 10 years pattern, but I don't usually look at Dow 30. When I look for opportunities with stocks, I go to S&P 500. Those are the quality stocks that I consider. And right now, we are defaulting at 10 years. That means we're looking at patterns based on the last 10 years. And here is the probability sides. If we say 10 out of 10 years, then these are all the patterns that have been profitable 10 out of last 10 years. If we select 9 out of 10 years, that would be that at least 9 out of 10 years was profitable. And you can see how many it found. Right now, 9 out of 10 years. Starting today, January 31st, 194 opportunities, 175 longs, 19 shorts. If I go to 10, it's 39 opportunities, 37 long, 2 shorts. Here it is. There are the date of starts, which is today. There's the ticker symbol here. This is the length. Days is the length of the seasonal pattern. Right now, the top seasonal pattern is 194 days, and that's because it's ranked by Sharpe ratio. It shows you the average profit and if it's long or short. This is all the information you need in order to define a seasonal pattern. Now, many people might not want patterns of this long, but you can always over here filter it by anything you want. So let's say I'm interested in 20 to 50 years, 50-day patterns, 20-50. Now these are 4 patterns that are between 20 and 50 days. I usually actually look for up to maybe 70 days. Still the same, 20 to 70 days, there are 4. Let's click on the top one, which is a short. This is Evergy. It has gained on the downside, average of 3.05%, 10 out of the last 10 years. Stryker Corporation, long, it's gone 10 out of 10 years, and so on. United Airlines is on that list. 25 days, it has made an average gain of 8.11%. Let me also show you another feature in here. Do you see this one that says MFE and MAE? And by the way, if you ever go on TradeWave and you don't remember anything that I show you, you can click on the tooltips over here and then go over anything and it will give you the details. So this is a very essential tool, MFE and MAE. MFE stands for Maximum Favorable Excursion, and MAE is Maximum Adverse Excursion. Now, I couldn't come up with better terms, so I decided to keep these very technical names. But it's actually, the acronyms are okay, MFE and MAE. Now, what do they mean? When you click on MFE, the light green part shows you the extent of the move of a security. So what's the dark green part? The dark green part is if you bought this security on the 31st and you sold it on the end of this pattern, which is 24th of February, after 25 days, the dark green part would be your profit. But what if you knew to sell it at the peak? Well, over here, take a look at this. In 2022, United Airlines made 2.75% if you bought it on 31st, sold it on February 24th. But if you know where the peak was, there was another 16%. So you would have actually made almost 19% if you know where the peak was. So this shows you the extent of the move of a security. But the dark green part shows you the end of the pattern itself. And by the way, you can click on any of these and actually look at the historical trade. Here is the trade on 2022. You see how it went up to up there and then came down here and still closed with a profit. But this is the light green part. If you knew to sell it here, you would have made almost 19%. And we use this in order to use our trading strategy on the top of a seasonal pattern. So the most important thing to do, I mean, for me, to do consistent trading, you got to know how the broader markets are performing. And what I mean by broader market is how is the overall market? Overall market, I look at S&P 500 index. S&P 500 index is the most important, more important than Dow because it has 504 stocks in it. And they're all quality stocks. And that's why even when I look at stocks itself, I go to S&P 500 list because those 504 stocks are very, I know they're the 504 most important companies in the market. Let's go and select indices common. And then I type SPX. This is S&P 500. Let me close this. For the last 10 years, we actually have a lot of data here, 97 years. Here's S&P 500, the last 97 years. You can go and look at every one of these bars. And actually, I'm going to click on buy and hold. This pull down over here, it's a date range shortcut. So instead of going and trying to put the date range in there, you can go and select date ranges like by month, or here I just gonna click on this buy and hold. So right now, oops, something went crazy. So right now, you're looking at the date range of January 1st to January 1st. TradeWave defines buy and hold as January 1st to January 1st of each year. So this is the value of S&P 500 if you bought it at the first day of the year and waited until the first day of the following year. And you can see how it performed each of the years. And the stats, we can go into this middle dot here, and you can see that S&P 500 was positive 66 out of the last 97 years from beginning to the end of the year. It had a cumulative return of 32,942%, and that is 68% of the years was profitable. Pretty interesting, but not very actionable. I can also look at this chart. This is what I call a trend chart. It takes all of the last 97 years. It actually averages them together. So the actual direction of the move is the is really the average direction of the move over all of those years. So you can actually see parts that are moving up means it was generally bullish for this time, but when it goes down, it was generally bearish. But let me show you one of the cool features here. You can filter this by presidential election years. If I click on presidential election years, which was last year, you can actually see how did buy and hold perform. I actually have a video that that shows that at the beginning of 2024 and one at 2023 that I predicted the markets are going to be positive by end of the year, and this is the reason. When I looked at this, the analysis of this to me says it's positive. Look at this. Most of the years were positive on the presidential election years. The 2 years, recent years that was not, was year 2000 and 2008. But these years, the economy already was tanking prior, and everybody knew that things are wrong, and also there was no incumbent president at the time. So the situation didn't seem like fundamentally repeatable. I mean, these didn't seem like it's going to happen in 2024. So I thought it's going to actually be just like all the other years, and it was. It went up 23.74%. But how about this year? This presidential election +1. This one is a lot more bearish in the high inflation time of the 70s. You see here? The only year that was negative, recent year since 85, was 2001. This year so far, we're up 3.45% since the beginning of the year. But now let's look at the trend chart. Trend chart has averaged all of these years together, all of them. And now look at the sharp trends. Look at this. Right here, it moves sharply up here, pretty much. I can go and select it. And you can actually see when I select it that it was pretty up, especially recently. But how about the downside? Oh, I've saved all of these, so I'm going to just select it here. It's quicker. How about this one? Look at how bearish it is. Between the 6th of February and 23rd of February on presidential election +1, which is how it's defined, it's 83% of the time went down. Last time it was positive is 2017, and the time before that was 1997, but this period has been a down. If I click on MFE, you're going to actually see it went further down and came back up on these years. That's why I consider this a bearish time right there. But why do I say this is going to be volatile? But look at the one right after it. So it goes up, then it goes sharply down, then it goes sharply up again. Here. Then it becomes bullish. In 2021 it dropped, and in 2009 it dropped. But all the other years, it was positive for this period of February 23rd until March 7th. And look what happens right after that. Then we go through a down period. Right there. But not as profound. So we're going up, down, and then we're going to go for a sustained up until 20th of May. And then down, then there's a big sharp up. This year is going to be volatile. Why? Because that's what the markets do. They just do that on presidential election plus 1 years. They do that frequently. So, by the way, this is one of the first webinars I've done, so I'm still not very good at this. I probably should look for questions. Just 1 second. Oh, can you hear me now? Uh-oh. You can't hear me. Did I do something wrong? Just bear with me for a moment. The audio input says you should be able to hear me. Well, I hope you are. So I can continue this. All right. So how do we find opportunities? Well, when I trade, I don't trade a lot now because it's really hard to run a company and trade, but I go through periods of time that I trade. Last time was I did 34 trades and 31 were winners. But it took my focus on trading. But what I did, this is how I do it. And by the way, my style of trading is in the book that's coming out. I go here. I look for opportunities. We can also select multiple years. Let's go here. Now I'm selecting 15 years with 15 out of 15 years. Profitable. Look at this. Apple, between today and September 12th, it's gone up 20 out of 20 years, an average of 19.22%. That's pretty good. Oh, I'm sorry, that was Cintas. Apple, 23.39% between today and August 17th. Here's another cool one, Progressive Corporation. Now, this is a fairly short-term tradable. This is 15 out of 15 years. And by the way, I always look at MFE because if I do short-term trading, I am targeting a certain percentages. So I am capturing these light green parts, not just the dark green parts. This is actually a very good opportunity for in 77 days or less that can be profitable quickly. So my typical trading is to this is you're going to read it in the book. I do what I call at the money credit spreads. This is not something that's common. I haven't even found a single person that does it online. It's just myself. When I expect a certain security to go up at a certain time, like here, I sell a put that is below the price of the security and I buy one above the price. And I collect a credit, usually 50% of the range of the two options. And then I wait for it to move in my direction and I sell it for about between 20 and 50% profit based on my risk capital. That's the short version of my style of trading. Sometimes I just buy the option out, but if I just buy a call or a put. I buy it 3 to 6 months in the future to try to not deal with the time value. So I can also select 14 out of 15 years and get a much bigger list. Now we should have some things between 20 and 70 days. PGR. Next one, Teledyne. It's also pretty good. Micron. And as you can see, whenever these opportunity windows come up, you can see that it comes up and shows you where the trend is up. You want to pretty much get out before the trend is down. But you can also find your own opportunities right on the trend chart by just looking for these sharp moves like, ooh, this down, let's see how good it is. Just go over here. There. It's actually really big drops some of the years, but overall it is not a great opportunity because too many years were positive. It's a little better to wait over here, but I do not do bearish. I've been burned way too many times. It is not a good idea to do bearish trades in a bull market. We're still in a bull market. Here's Applied Materials, one of the stocks I've traded a lot over the years. Applied Material was probably better on the 29th, a couple of days ago. But Applied Material, great opportunity. Look at this. Even on losing years, it actually went up 16% before dropping. So this is tradable. It went up 9% before dropping in 2015. This is, to me, this is a 15 out of 15 year pattern. You can also go higher, 20 years. Here's one I had on the presentation. I found this 20 out of 20 years. I didn't even know this company. Lind Place. Oh, that's they make gas for commercial gas for medicine or something. If I select 19 out of 20 years, look at that. Apple, Arch Capital Group has a pretty good opportunity. Now, I am showing stocks right now because I typically look at stocks, but you can do the same thing with futures. RBOB gasoline commodity, last 10 years. Sharp, oh, gas prices are going to go up. Great. Live cattle. Look at this sharp drop of live cattle over here. Look at that. Oh, this is tradable. I could buy options on it even if I don't want to do futures. Look at that. 9 out of last 10 years. It's dropped 6.53%. You can also increase the number of years to see how it performed last 20 years. It's valid 20 years also. 25 years. Same thing, 92%. 2 up years only. Wow, this is a good one. I actually hadn't noticed this one. I hadn't looked. So these are some examples for futures. What's this one? Oh, lean hogs, LED, lead. And also take a look at gold. let's see, we got 24 years on gold. So we have a up move for gold right around here. By the way, last trade I did was GTX, which was gold miners. And that was another interesting case. It actually was a loser initially. But then when I looked at the trend chart was moving sharply up after the end of the date range. So I stayed in it and I was out with about a 15% gain after I was a loser for about over a 10% loss. And if I'd waited another day, I would have made a lot more, another 30%. I just bought a call option on that one. Actually, I bought like 4 call options. All right, here's gold. Between February 3rd, February 22nd, right there. I'm going to make this 21 days just to go to this peak. And we can see it went average of 4.44% up, but only 58% of the years. On the years that it didn't, well, this one for 2003 went up before dropping, but these other years, it went up 1% and then dropped. Not a great opportunity. I don't see a great opportunity here. At least not for this move. There's a lot of other opportunities coming up on different times. Let me go, how about Forex? I do not trade Forex, so I just look at the data. Here's New Zealand dollar, Canadian dollar. Look at this. It is on a down move all the way to September, and it turns around and goes up based on last 45 years. But look at this time, and this is about starting for today until August 16th. 71% of the years it's gone down an average of over 5%. Here's government bonds from all over the world, many of them. I also don't trade government bonds, but this 5-year bond looks really good right there. Look at how sharp it's moving upwards. ETFs. I do trade a lot of ETFs. Well, for when I trade, as long as I find a good opportunity. But over here, the technology sector, 198 days. That's slightly too long for what I usually do. It's until August 16th. But it went up average of 15.52%. Pretty decent. And there's a few foreign ones. London, Toronto, Korea Exchange, Korea Kosdaq, cryptocurrencies. Let's see what we have for cryptos right now. Here's Litecoin. 9-year trend. 8 out of 9 years. Between today and February 15, Litecoin goes up and then turns around and goes straight down, straight up. But the big opportunity is right there. Look at this right here. On the 12th of October, it goes straight up. Right there. Well, still has a couple of losing years. Well, I don't trade crypto, so I don't even know if that's a good opportunity or not. Mostly I do S&P 500 stocks. And sometimes I do futures and ETFs. So this is the basis of the actual analysis. There's a lot of features in TradeWave that are very helpful. One of them is here, it's the portfolio manager. You can create many portfolios. And then, oh, I actually selected some things to show in the webinar and forgot. So you can add to your portfolio, and you can also, it creates a custom report for you from what you have created, and you can share these reports just by the URL, or just use these buttons on the top. You can also click on the notifications, and you can create Google Calendar events for the beginning and end dates of a pattern. And you can also set exactly when, what time do you want the event to pop up for you. You can also simulate trading. Let's say you say how many shares you want to track, and it will track the shares based on the close price of the entry date and close price of each date, and you can see if certain thing is winning or losing. And then you can see the overall portfolio. Here are some of my old ones. High flyer stocks. Oh, look at this one. I had selected Tesla, RUN, and ICE, and it was up 33.08%. From this is just by the exit date gains. Here was a really cool opportunity from the London Stock Exchange. Look at this. The Sharpe ratio of 5 for 10 years is staggering. That means every year was nearly the same. That's why I took a note of it. It was just incredible how high that was. So and look at it. Wow, I think I can do trading on my Schwab account. I think I might trade this one. So far it's been up this year 1.51%. But the average gain is 15% from now until May 16th. And it's done it all these years. This actually looks really good. Another thing you can do over here, if you click on this down arrow, it takes a picture of the screen as is. And you can have a picture to share. If I click to the right, this is the stats table. The stats table just take the pattern that you're looking at, and it gives you full statistics about it. For example, over here, the average gain was 14.9%. What the median gain was, standard deviation. Most of these are not necessary, but they're helpful if you're into math, like I am. Another very cool feature that it was not my idea. Somebody suggested it, and then it was built into here, is this S&P 500 buy and hold. Take a look at that. Let me go back to the American thing. How about analog devices? So look at this cumulative return for the last 10 years for analog devices, 209%. But the cumulative return of S&P 500 buy and hold for the entire year is 185%. If you held S&P 500 from beginning of 2015 until end of 2024, you would have gained 185% on your capital. If you traded analog devices from today, January 31st, and held analog only till August 8th for the last 10 years, that's 190 days of the year, less than half of the day, you would have beat the S&P 500 and still have your money out. So you can compare any of these date ranges to S&P 500 buy and hold. Well, there are many things you can do. Another for long-term users, let's say somebody's looking at Apple, and we have 44 years of Apple. What if we look at buy and hold for Apple? If you bought Apple when it went public in 81 and held it till now, end of 2024 actually, you would have made 205,000% on your capital. Let's take a look at Apple's trend charts for the 44 years. Do you see the sharp drop over here? This is around the month of September, right there. Let's look at September. September did terrible for Apple, actually, until even a little more. I think it was 33 days. So Apple was a winner in the downside 28 of the last 44 years. It's a bearish time for Apple. What if you wanted to see how would this cumulative return for you perform if you held Apple only the rest of the year except the part we just selected, except this date range? You click over here and click on reverse date range. Suddenly you went to 4.89 million% if you just knew not to hold Apple in September or a little more than September. You can do this with any stock and analyze them and try to decide, even for long-term buy and hold, how to deal with it. However, this is not really feasible because of tax implications, but it would be in a Roth IRA. It would be much better to hold Apple in a Roth IRA the entire year except September, or you can come and fine-tune it right here. You can also look at everything from by the quarter, second quarter, and so on. In any shape or form you can imagine, you can slice this. It actually does a whole bunch of what fundamental analysis is all about, because price always eventually catches up to the fundamental health of a company. All you got to do is look at the price on these and decide if it's healthy or not. Okay, the last thing I'm going to do, because the hour is coming up. Let's go take a look at the one stock that everybody talks about right now. NVIDIA. NVIDIA was in this list as the top pattern for the 22nd of January. If I go and select 25 years, this holds up for NVIDIA pretty strongly from 22nd of January until February 18. The losing years, 2002, it went up 9.88% first and then lost. 2008, it went up 16.5% and then lost, and this year it's down 15.89%. Actually more than that. About 20%, but right now it's at 15.89%. It is the highest amount of drop it's done during this date range since its inception. It was pretty close here, 2001 and 2000, with a couple of points, but I still don't consider this an outlier because it's about the same. So is NVIDIA going to go back up? I don't know, but the chances are there because it's done it 25 years or 24 years in a row. At least it's going to go quite a bit higher. I consider NVIDIA currently bullish starting from this date, which is yesterday. So the probability is on NVIDIA's side that it's either going to go higher, not lower. Is it going to recover? I don't know, but chances are higher that it's going to go higher based on what it's done all of these years. That's what I was going to present. So I'm just going to tell you about the subscription for here that we have. We have free and premium. Free only sees today's patterns. Also, it's going to be slightly more limited coming up soon. Right now it sees all the patterns, but it's going to be cropped and it's going to be part of the patterns. The premiums see all the patterns, but they also are able to change the start date and fine-tune all of these. For example, if you're looking at today and you see discrepancies on the trend chart, maybe next week would be better to be inside of a certain trade, and the premium can figure that out. Also, we have a metric that's coming up, which I didn't show you, which I call it the TradeWave ratio and TradeWave average metrics. These are proprietary measures that are based on MFE and MAE, and it gives you another edge that you just didn't have before. And the AI features that are coming out soon, which is a chatbot and a AI score, will be on the premium. I did an experiment. I mentioned I was able to make 31 out of 34 of my trades winners. I have a spreadsheet I can show it. Aaron West has done really well, so have their students. We also have a hedge fund trader, Jason Perez, who's been using this and has really killed it in the market. He said that he has improved his outcome by about 25%. Another cool thing about here is that this is completely transparent. There's no black box that says this or that in there that we are not telling you. Even our proprietary measures are not black box. It's exactly known how to calculate it, except nobody does it. So before TradeWave, this is how I did it. I did a lot of guessing and second guessing, and I was very inconsistent. Afterwards, I have a lot of confidence. Even when things go against me, I can see the data. Is this an outlier? Did I make a mistake? Or it actually makes trading a lot more comfortable. So I like trading like this. I actually have considered stopping marketing this and just trade, but unfortunately I can do one or the other, at least for a while. So here's one offer for this webinar, and this is also getting recorded so people can see this. Our top tier subscription costs $2,268 a year, which is $189 a year. Well, right now we're signing up for founding members. It's going to be less than 100 people, which of course we also ask to give testimonials, video testimonials for us. It's a 92% discount for founding members, and we'll have weekly Zoom calls and even one-on-one onboarding for the first few people, and all of the new features that are coming out. If you would to take this offer and do a testimonial, you would have this price for life of $189 a year. If you're not comfortable with the testimonials, then it's just the first year. So here's the coupon code for this, called Founding Title. That's the title is the name of the subscription level. So Founding Title, and there's a limited number of coupons available. It actually automatically turns off. But there are just a couple of people on right now, but these will be advertised in February, and we're going to start doing this big. This was more of a initial webinar to try this out. That is it. I hope you enjoyed this, and thank you for attending.